Hey everybody, Smart Silver Stacker here. Hope you're doing well. So it has begun this morning with Donald Trump at the helm. The United States imposed a 25% import tariff on both Mexico and Canada, and we doubled existing tariffs on China. That rate is up from 10% to 20%. Now, not only are these countries the biggest trading partners of the United States, they also are the biggest producers of gold and silver worldwide. So while the effects of this trade war will likely be far-reaching, the impact on the precious metals market will be very significant indeed. So let's get to it. Buy your gold and silver at SD Bullion. Right now, new customers can get gold or silver at spot by visiting sdbullion.com/new. So before we delve into the effects of these tariffs, I do just want to remind all of you that I do have a free e-newsletter where we cover topics just like this one. So if you enjoy today's video, I invite you to check out the link down in the description to sign up for my free e-newsletter. And don't worry, I don't spam you. I don't send out a lot of emails. I send out about one per week, and guaranteed if you find this information fascinating, you are going to like this newsletter. It's completely free. Sign up with the link down in the description. Okay, so what are tariffs going to mean for the precious metals? Well, first, let's examine some of the data surrounding these trading partners of the United States, which now have significant tariffs imposed upon them. For example, Mexico is the world's #1 producer of silver. Last year, they mined about 6,300 tons of the metal. China, well, they're the #1 gold producer, and they also come in at the #2 spot for silver production. And then Canada is a major producer of both precious metals. They are the world's #4 gold producer. And the reality is, especially when it comes to silver, the US just doesn't mine enough. We mined about 1,100 tons of silver last year, but according to the USGS, we also imported about 4,700 tons. And where did that silver come from? Well, the same data from the USGS reveals that about 44% of US silver imports come from Mexico and 18% come from Canada. The next country on that list is Poland, and they only produce about 5%. So there's really no other giant whale producer of silver that can easily fill that gap. And what the tariffs mean for the metals is that importing them just got a lot more expensive. How much more expensive? Well, think about this. Silver, last time I checked, was trading around $31.71 per ounce. And say we want to import an ounce of silver from Mexico, well, with a 25% tariff, that ounce of silver, instead of costing $31.71, is now going to cost $39.63. In the case of gold, let's say you want to pick up an ounce of gold from Canada. Well, an ounce of gold right now, according to the spot price, last time I checked, is about $29.15. So if we put a 25% tariff on those imports, that means an ounce of Canadian gold is going to cost you over $3,600 now. But what does that mean for us, for the stackers? Well, if you are inside of the United States and you have a position in physical precious metals, those metals just got more valuable in the sense that in order to have them domestically, there's no tariff, no extra tax involved. So well done to all the stackers out there. But what about risks for the gold and silver price? Well, today, gold and silver were up despite the fact that the stock market was tanking on this tariff news. So part of that had to do with safe haven bids, I'm sure, but also the increased cost of imports has given some support to precious metals. Gold and silver were some of the few things in the green earlier today when this news hit. However, think about this. The trade war is continuing to heat up. China, Canada, and Mexico have talked about imposing their own retaliatory tariffs on U.S. goods, a move that could potentially hurt American businesses, could increase the risk of a recession. Now, I want to be clear here. I'm not really blaming Trump or the tariffs for a recession that we enter into here. We live in a bubble economy, which has been based on massive amounts of deficit spending and borrowing over the past decades. I mean, since the 2008 financial crisis, the Fed alone has been printing trillions and trillions of dollars. So we already have a bubble economy. Now, Trump has certainly played a role in inflating that, but he's not alone in that. However, these tariffs could be the pin that pops the bubble economy that we currently have. If that occurs, you could see multiple assets selling off across the board in tandem, and it's very likely that the gold price and the silver price will be hit by that. However, also think about this. The whole plan to impose tariffs, a lot of that has to do with reshoring American manufacturing. So if industry and jobs are brought back to the US and we start producing even more things here domestically, that is going to mean in the US even more demand for especially silver, a major industrial input. So there's a lot of factors that you have to balance here. Also, the really big thing I want to emphasize about a recession and a possible sell-off in the gold and silver market, the results from these tariffs, is that any financial crisis or economic downturn or major recession or stock market bubble popping that we experience is likely to be met with enormous levels of stimulus. So while in such a case you might see a temporary drop in the spot price of gold and silver, one, I'm not sure that premiums would really fall along with the spot price. So, physical metals might not lose their value the same way that the paper derivatives do, but also they will likely be the first thing to recover because, again, if there's a massive financial crisis, if there's a recession, you can expect there to be a huge amount of pressure on the Federal Reserve to cut rates and print money and stimulate the economy, which will be very, very bullish for gold and silver. I mean, think about it. Right now, Donald Trump has already floated the idea about these $5,000 stimulus checks based on Doge, Department of Government Efficiency savings. And also, he has been advocating for lower interest rates for quite some time, the whole campaign trail, and since he's gotten into the office, he hasn't changed his tune. So if tariffs do trigger a recession, I mean, stimulus checks are going to be, I think, a guaranteed. You can mark my words on that. And also, lower interest rates will just be the tip of the iceberg. You can expect a return to quantitative easing, an increase in government deficit spending. All this talk about cutting spending will be out the window, and the Federal Reserve will likely be directly monetizing debt issuance from the Treasury and expanding their balance sheet once again. So going into this trade war and recession, I know that I want to have the certainty that comes from physical, tangible hard assets in my own custody. And I think a lot of investors are going to get that same idea. In fact, maybe this trade war could be the event that triggers a resurgence in retail demand for both gold and silver, something that would be very bullish for the silver price specifically. But let me know what you think. I mean, gold and silver to me, they are the ultimate safe havens in a trade war and economic chaos. And if the global economy destabilizes as a result of this trade war, then hard assets are going to just become more vital than they already are. I'd love to know what you think though, so leave me a comment down below. And if you enjoyed this video, make sure you check out the one that's popping up on your screen now. Don't forget to like, comment, and subscribe. Thanks for watching, everybody. Stay safe and happy stacking. Smart Silver Stacker, out.